Okay, this is Brian Stoll for Timing Strategies, Thursday, November the 15th. And again, another day of selling. No need to recap the obvious all day. Everybody's squawking on the news about what happens. But what I am going to go over is what the possible scenarios are setting up to be. There's always an A, B, C type of situation. So right now, we are long as of this day. Actually, we were long, and if you look at our previous videos, as of this day, which was Thursday or Friday of last week, we went flat. And I was looking for the reason why we went flat was because we were anticipating a little bit of a fall through Veterans Day from yesterday back down into that level, the 145. I keep talking about that in my prior videos. You can see we didn't get that yet. And are we going to get it here in the next day or two? Well, here's the scenarios I'm going to go over. Long 60% from that day. Right now it's a little bit of an ouch. Don't want to really eat it again though, because we got several scenarios with how we open, how we trade going into tomorrow's option expiration in the morning. If we get long, if the market opens anywhere somewhere in the range between today's open and close, whether it be there or whether it be here, get that magnet off there, or there, and we take off either direction, we want to get short below yesterday's low, or excuse me, which is now today's low. We want to be short all the way down for a test of Monday's low, which was right there, obviously. So a test and a wash, a potential wash of that low. If we do, and we head back above that low, whether it comes back down to test that low at the 141.5 level that I'm looking for, or just enough to stab the lows, meaning just kind of, come down, take out that low, and head back up. What we want to be is getting long back above that low, that threshold above, put the price bar on there, above 143.65, call it. And again, that can mean that we can take a real deep header into that 141 level, 141.5, and still, if we trade back above that low of yesterday, we definitely want to be aggressively long, and I will be. Right now I'm a little moderately long. Aggressively long is a relative term, so that would be 90 to 100% long if we close back above that 163 level. Scenario number two, if we open here somewhere in this range, and either way we take off to the highs, to the upside, well, hey, now things are starting to look a little better. We don't have as aggressive a position on as we would like to have if it keeps going and goes back up to test that reversion channel that we've got up there, which is now sitting at about 153.5, 152.5, 153. We've got a 60% position on at that level. We'll see what happens. But presently we have a 60% long position. I want to go over a couple other symbols, starting with the QQQs, quad Qs. Interesting little scenario we've got developing here, and this is for all the time price people out there. It's basically voodoo, but you know what? The voodoo works sometimes. You just got to know when and when not, if it's going to work, and that's that's the trick to anything, obviously. But if you take a look from this line that we just drew, from here to here, we've got from the July highs to the August lows about a 12.2% drop. Now we've got from here, from the highs of the 31st, almost down into those lows. So that scenario sets up real neat on a percentage drop basis, down to right about that level on the Qs at about 48.50. If we can get a 48.50 print, and again a trade back above, so again we're looking for potentially a move back down into that low, wash out Monday's low on the Qs, just enough to get it, we don't want it to wash too deep because then it gets a little too scary, but take out those lows of Monday and then start heading back above the lows of that low of Monday. Then we got a real high probability low risk entry point, again especially for our end of day setups. And one last little piece of information for all the idiot wave fans out there. And I mean, the heat wave is great when it works. Then again, like anything, the key is to know when to work it. So taking a time price projection of that cycle low down, which is about a 20 bar day, 21, 22 day low, or swing low from the highs back down to the August lows, into the highs of the 31st of October, puts us right on tomorrow. Excuse me, that's not right. Yeah, right on tomorrow. Or is it Monday? So we could see this price trade out to Monday, as late as Friday, as early as Friday tomorrow, maybe as late as Monday, we don't know. But that does just give us a little price symmetry, and again, to maybe be a little more aggressive with our long positions. Last point bringing up here is the XLF, which is the banking sector. We are getting a test of those lows. Will that, and that's not the best, that's e-signal again with their garbage data. Got to get that fixed, but that is not the true low. But we are taking out the lows. We're retesting those lows that we had back in on the 8th of November on the XLF. If that holds and it starts heading back up, well, then we got a short-term bottom, yo-ho-ho Santa Claus rally, and obviously the Fed and the Treasury Department, the last thing they want is people to get scared going into the shopping holidays, into Thanksgiving, and so forth. So if they got to debase the currency just a little further to prop up the stock market to get that Santa Claus Tooth Fairy rally, I can almost be certain that they would. I wouldn't put, I'd certainly lay heavy odds that they will. Other than that, like I said, we're just going to have to wait till things shape up. Sitting on a position right now, 60%, that's not working to our favor, but it's not working too bad to us either. We're only down about 1% being long, about 1.5% being long, 60% total net account value. Other than that, please give us a call or drop us an email. I'm wishing the best tonight for Thursday the 11th, or November the 15th. And that's about it. Okay, have a good night.